Hi everyone, let's have a look at my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the low time frame bearish scenario, where we've been looking for a three-wave structure in a WXY that is already finished, after which we now expect further downside, where if we look at this move towards the downside, the low of this first wave might already be in, or this is still part of a wave 4 and another move to the downside is going to be made before then potentially a retracement in a wave 2, but I'll explain that in more detail in the micro scenarios I have for you. If this, however, is the low of a potential first move to the downside and we're then looking for a potential wave 2, then we're looking for a three-wave structure in a wave 2, where the most common target area for a wave 2 is between the 0.5 and the 0.78 Fibonacci, taken from the high of Y to the low of this wave 1, which sits between 26.6k and 27.1k. A rare target for wave 2 is the 0.382, which has been hit, as you can see, and another rare target is the 886. If we then go to the bullish scenario, then we are still looking for a continuation to the upside. So over here, we're then looking for a three-wave structure in either a WXY or an ABC. And an ABC is possible because price retraced to the 0.9 Fibonacci, taken from the low to the high of this wave A. So potentially, this can then be a five-wave move to the upside and then a bigger wave C, or a three-wave structure in a bigger wave Y. However, looking at the price action that we have locally, it doesn't look too bullish yet for a bigger push towards the upside. So from a trader's perspective, if one have entered around this area over here, stop loss break even wouldn't be too bad of an idea. And then of course we have to wait and see how price is going to develop, because of course I do have some bullish scenarios for further upside, but over here it looks a little bit corrective. But what we were looking for is a bounce inside this target area over here for then a potential finished move of this wave C. So you really want this wick low to not be taken again. If this wick low is going to be taken, basically it invalidates this whole bullish scenario, because in this particular scenario the yellow count is an expanding flat, which is a three-wave in A, three-wave in B, and then a five-wave move down in C, which then is a 1, 2, 3, 4, 5-wave structure, after which you then expect a continuation to the upside and no further downside. And this wave C over here finishes then a WXY in white, which is a three-wave, and then an expanding flat in a wave Y, which then also finishes X or B for a move towards the upside. It has to be said that we do have some bullish divergences between the low over here and the higher low created. However, we also had bearish divergences up here, but these already played out. But yeah, we have to wait and see. I prefer to see some more price action locally and maybe some bullish CVD divergences forming as well, or some other structures that can give a bit more confidence for a continuation to the upside. If we then go to the micro scenario, then this is one of the two bearish scenarios that I have for you. So this one says, okay, this is the high of a potential wave 4, but we still have a 5 to the downside. In this particular scenario, this is then the low of a wave 3, looking for 4, where the invalidation for this wave 4, I put it all the way up here at 26.8k. However, if candles are going to close above the 0.5, which is sitting at 26.6k, that is the moment this wave 4 becomes invalidated and we have to look for other options, right? And then we don't expect another move to the downside in a wave 5. If we go to the other bearish scenario that I have over here, it basically means that the low of wave 1 is in, and in this scenario price has to at least reach the 0.5. So this is the difference between having another move to the downside in a wave 5, where currently this is a range to the upside in a wave 4, or this is the end of a wave 5 and we are in a corrective 2. So the moment price is going to run against that 0.5 or even go above that 0.5, where we also have a daily naked point of control, that is the moment that this potential bearish scenario is going to take is going to go into action, basically, where this is then a wave 1 followed by a three-wave structure in a wave 2. Most common targets between the 0.5 and the 0.786, as mentioned, between 26.6k and 27.1k, where we have that daily naked point of control as well at 26.7k, after which we then expect more downside. If you go to the bullish scenario, because there's always a bullish scenario, however, as it stands now, it's not too bullish, I gotta be honest, where in this scenario over here, this move to the upside looks very much like a three-wave structure, and looking at the area where price was eventually moving again to the downside, in this potentially being a three-wave structure, it looks to be part of a WXY, where if this is the high of a WXY, the target area for Y is between the 0.618 and the 1.236, and as you can see, that has been nicely respected over here between the 0.618 and the 121. If this is or was going to be a zigzag, which is a 5-3-5 wave structure, you want to see price hitting the most common target for a zigzag, which is between the 1 and the 1.236 trend-based fib extension taken from the low to the high over here. So the fact that this does not look like a zigzag also makes it more difficult to think about a potential leading diagonal for then a bigger wave 1 diagonal, then a wave 2 and a big 3 to the upside for the more bullish scenario, because in a leading diagonal I would prefer to either see 5 waves to the upside or a 5-3-5 wave to the upside to start a leading diagonal, and that is not what we got. Now if we do think about at least a little bit more upside, then we're thinking about this to be a wave W or a wave A, followed then by a three-wave correction where one of the common targets for a wave X has already been hit, which is the 0.5. So if we move towards the upside, it is absolutely valid, where then the daily naked point of control is going to be an interesting area at 26.7k. So basically this daily naked point of control is interesting for a lot of different scenarios. And if you would ask me like, hey, what is your preferred scenario? Then if we go to the low time frame scenario, so go up in the time frames and we compare the bearish one with the bullish one, well, preferably, or at least I think it would be nice to see a move to the upside, because I know we have a high over here, a high over here, and also with my high time frame count that I have in the high time frame video, I think it would be nice to see some upside. However, the low time frame counts that we have at the moment are not really supporting a bigger move for a lot of upside to come, which increases the probability for a bearish scenario. And if we go to the micro time frame, I think between the two bearish scenarios, potentially having the low already in would be quite nice, and now eventually in a potential wave 2 for a 3. But yeah, it's like even the bullish scenario is in the end bearish, because this is a corrective structure and not a 1 2 3 4 5 for a lot more upside. So it doesn't really look too great, to be honest. And if we go to the CVD divergences here, the AGGR chart, then yeah, we had some bearish divergences here as well. At the moment in this whole structure, since the bounce that we had, there were no bullish divergences created so far, because you want to see a higher low made but a lower low on the CVD. And today I've uploaded an educational video about the CVD and everything you have to know, so make sure to click the card at the right top right now for that video. But yeah, no bullish divergences over here, even bearish divergences created over here for then the move to the downside. Now these bearish divergences already played out. However, for some extra confidence for eventually more upside, I would like to see bullish divergences. It's not necessary, but it would support a potential bullish move to the upside. Again, on the low time frame count, I would really enjoy seeing more upside, because it really fits with the high time frame scenario. But yeah, we need some more clarity on the lower time frames to come up with a proper scenario on the micro time frame over here for a move towards the upside. So even though there was a little bit of unclarity, I suppose, on the micro time frames, I hope this video was still helpful or valuable to you. Please check out the macro and the high time frame video if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.